Right, hello everyone. This is the first live stream that I'm doing since the start of the paid group. So this is the first one, that the free members will see. So in this live stream, this will be for all the free members. It'll be for the tier 1 paid members and for the tier 2 paid members as well. So this should cover everything. So what we'll do to start with is we'll go through the macro situation and what's going on there and how that may affect us. We'll then look at the on-chain data, as this should help us to understand the flows of the coins, what sort of cohorts are buying, which sort of cohorts are selling, and that will sort of determine our sentiment for how we go forward. We will then look at the main core charts, so it'll be Bitcoin, Ethereum, and a number of the other large caps. I'll explain the box strategy that we play in the pro side of the group, so the paid membership side of the group, and how the boxes have worked. Let's get cracking. So the first thing we're doing is the macro situation. So as many of you know, what's happened over the last 18 months with COVID is that the market generally was going to be bad. So what the Fed has had to do is they've had to stimulate the market by basically pumping money in. So I saw a stat the other day. It was probably, don't quote me on this, but it was something like 40% of all dollars have been printed in the last 18 months. So, all the dollars that are in existence, 40% of that has been printed in the last 18 months to deal with the pandemic, to help stimulate the markets, to help people still feel like they have money to keep spending up. However, what this has done is this has meant inflation has gone to highs of the last, I think it's 20 or 30 years. It's not been this high for 20 or 30 years. So you're now starting to see that the actual value of your dollars is low, and they just can't buy you what they used to be able to buy you. Can everyone just let me know if they can hear me okay? I think my stream is slightly behind. I'll wait 5 to 10 seconds more. You can hear me. Okay, perfect. Sorry, sometimes I just go through and I realise that there's been something that's been muted or something, and I've just gone on this talking splurge. Anyway, okay, perfect. Let's crack on. So what's happened is that they've printed all this money, put it in the economy. The value of the dollar has become weaker. So if you had $100 this time last year, you could buy a lot more for that $100 than you could do today. It's going to cost you another 7% more to buy the things that you could have bought for $100 last year. So it'll cost you $107 this year to buy X amount of apples, and then last year it would have cost you only $100, where this year it cost you $107. So that's the point of inflation. So what they're doing to combat this is at some point, so what they were doing is by pumping money into the economy, so I should explain this first, by pumping money into the economy, the way they were doing this was printing the money and then buying up bonds and mortgage-backed securities. So what they do is they buy these bonds and mortgage-backed securities up, and then that dollar flows in from basically the top down. So what the Fed effectively have now is they printed loads of dollars and they spent it on all these bonds and mortgage-backed securities. So now they're sitting there with lots of mortgage-backed securities and bonds on their balance sheet. Some are even maturing. Most are maturing. But the case is now, because inflation is so high, they pumped in all this money. They now hold all these bonds and mortgage-backed securities on their balance sheet. They have to basically combat this in one way or another. So the way they do this first is by raising interest rates. People think that the first one will be in June. I think it's probably unlikely. I think the first one will be in March. So what that will do is by raising interest rates, that will make the cost of money increase. So if you want to borrow more money, it becomes more expensive to do so. So that again will lower the incentive to go out and borrow money. So that should help to reduce the supply. You then have, so what the government was doing, what the Fed was doing, is they were spending $120 billion a month on bonds and mortgage-backed securities. So every month they're printing $120 billion and they're spending it. What they're doing now is they're now cutting that back. So instead of putting $120 billion into the market each month, they're now only putting 90, 60, 30 until it goes down to zero. It's likely that by, I think it's by the summer, that it will be down to zero. So there'll be no more stimulation, no more stimulus from the Fed, and that's all normal. That's all okay. Obviously, we're now dealing with a pandemic. It's not like we've been through a big boom and all of a sudden they have to sort of slow down, and raise interest rates, and reduce and sort of accelerate the taper. So accelerating the taper is accelerating the speed at which they reduce the amount of money they're putting in each month. So that 120 billion becomes 90 billion a month, 60 billion a month, then 30 billion a month until it's at zero. However, that's all normal, that's all fine. That doesn't worry us. It doesn't really worry the markets. The markets price that in as they expect it, but they don't. No one is worried about that really. That does not cause a bear market. But what can cause a bear market, and something that the Fed have done, and they've done it in quite a sneaky way. So what's happened is, as I said, they have all these mortgage-backed securities and bonds on their balance sheet with them maturing. So at some point they have to offload these. So they have to sell them back into the market. So with rising interest rates and the acceleration of the taper, you have a withdrawal of liquidity. You have money, basically the amount of money being injected into the economy each month is decreasing. So not really a withdrawal of liquidity, but a decreasing amount being injected in each month until you come to the point where there's no injection in. And the interest rates should mean that the normal man, doesn't borrow as much as they were in the prior year and a half. So what we're saying now on the third point, it's called quantitative tightening. It's where the Fed has these mortgage-backed securities and these bonds, and they're now having to sell them back into the market. So what they're doing is this will start probably in, I would say Q3, Q4, but it'll probably be Q4. So it'll probably be from October, November, December time. So still a long way away, but this just sets up the market. So with what I'm saying, take it in mind, and I'll explain the investor reasoning with this information after. So with this quantitative tightening, this is them selling those mortgage-backed securities and bonds back into the market. And what does that do? That means in exchange, they will get dollars. With these dollars, they will hold them back. That's not going back into the market. So they're removing dollars from the market. They're removing liquidity from the market, in order to basically help the dollar to regain some of its value, to reduce the supply of the dollar. So with all this in mind, investors are looking at this. Sorry, I have this article up just because, it just explains to you what's going on. But and I'm explaining to you as I'm talking. But with the quantitative tightening, they're trying to help increase the value of the dollar again. So that's what I was saying. So investors now look at this and they say, okay, crap, this is not very good. We need to now, there's going to be a removal of liquidity. So when you see things crash, this is a very good way of describing it. So if I can go here, sorry, it's a little bit laggy because I'm streaming at the same time. The streaming software means it's not as fast. But what happens is, if I can zoom in a bit more, so when the market is okay, liquidity-wise, so there's lots of money basically in the market ready to play. That's under the good conditions laid out by the Fed. Now we have bad conditions. So this is how it's changed. So under the good conditions, where they're printing money all the time, no one's really worried, which is what we got early December. This is probably the last time we'll see it. When you get a big crash, let's prove it on the daily. The daily's even better. So you'll get a big crash. Sorry for all the boxes and the lines. Try and I was going to say try and blank them out, but I can blank them out for you. So what we saw was, this shows the liquidity was there, because we saw the price crash from 49,200. It went all the way down to 41,800, and then it bounced back up to 49,200. So it's done a 20% move in the day. As it's coming down here, I mean, this all happened in the matter of like an hour or two. So, if I could I would zoom in, but it'll mess up the chart and the stream will lag low, so I'm not going to do it. But this all happened in an hour or two. And what happened was, as that price is crashing, all the bids are flooding in. They're buying it, which is why you see it shoot back up and close not disastrously badly. So that shows you liquidity was there. The conditions laid out by the Fed are saying to people, look, we're still printing money, go for it. Put your money, be risk on. What we're seeing now is we're seeing that when we crash, we close to the bottom. On these big white candles, we close towards the bottom of the candle. Here, we close not too far away from the bottom. Here was the only time we saw some liquidity come in, but you're not seeing it shove up. All you're seeing is it closed towards where it opened. So that shows you there's not that much liquidity there. So we're already seeing this removal of liquidity. And you can see this just in coins such as Solana. Every time there's an up move that takes like a week or so, you get maybe a big move down. You get a big move down that will wipe out 5 days worth of gains. So the liquidity is not there to shove the market up. And as we see the Fed sell these bonds, sell these mortgage-backed securities, you'll see that liquidity is becoming... They're basically telling the investors liquidity is going to decrease. So there's not going to be the bids out there. That encourages investors to go from a risk-on attitude. So a risk-on attitude is we'll play crypto because we know liquidity is there. They'll go from that to a risk-off attitude. So they'll start by basically moving into risk-off assets. So safe havens. So Bitcoin will start gaining dominance now because it's the safe haven of crypto. But away from this, most investors now will just stay out of crypto as a whole because in general it's a risk on asset class. So what they'll do is they'll flood out of crypto and they'll flood into gold, something that is like a historical safe haven. It's man's last thing or whatever you want to call it. So gold will always do well in a really bearish market that's been laid out by the Fed. So that explains the macro situation. Let's quickly whiz through some of the on-chain data. So this is showing you the flows of Bitcoin in and out of exchanges, who's doing the buying, who's doing the selling, and who historically has done the best. So who do we want to look at who historically has done the best that we then want to copy? So the first thing we'll look at is exchange net position change. So this is the amount of the overall net flow of Bitcoins into or out of exchanges. If there's a net inflow to exchanges, you'll see green spikes. We don't want to see green spikes because green spikes means that there's more flowing into exchanges, i.e. to be sold, than there are flowing out of exchanges, i.e. having been bought and put in cold storage wallets. Rather, people are prepared to hodl rather than to be selling. Green means that they're transferring from their cold storage wallets into exchange to sell their coins. So we can see here, if I zoom out slightly even more, so all the way up in the bull run, we pretty much saw most like heavy red, really, really heavy red. And then we saw this heavy green in here, and we started to see this red here. And we got the green after. With the green after, you think this is nowhere near as much as this red here, so maybe we're still okay. And now you're pretty much in a neutral. Now you're in a, there's more flowing in to be sold now, which is obviously not great. But now you want to identify who has done the selling and who has done the buying. So the thing we look at now is mean transfer value. So this means if the mean transfer value is high, or if the mean transfer volume, is high, that means that the average transaction or the flow on chain, the average transaction is of high US dollar value. If it's of high US dollar value, that will signal that institutions are either getting in or getting out, but either way they're active at that point in time. As you can see here, the institutions weren't active in any of this, but they were really active here in September. So, but the only issue is now we're having these spikes almost come down. So as they're coming down, and we saw a lot of the selling come up here, and if we look at the large wallet inflows, I actually can't get it up, but the large wallet for some reason I just can't get it up, but the large wallet inflows is not showing any big buy sides from the whales, and it's actually showing that the whales have offloaded already. So the whale offloaded majoritarily in this 58k range up here, and then also down here at 50k when it bounced from the 46s up to 50, 51. That's where so all the ones that came in here have offloaded in here basically. So let's look now at we now want to look at the lifespan of older coins. So historically, the most profitable cohort is the 1 to 2 year and the 2 to 3 year. So what we don't want to see is big spikes of selling. So if we look at the coins that are aged 3 months to 6 months old, short-term people, we can see the selling is not, the spikes indicate selling. So they were selling at the lows, which is what, this cohort does. They don't take profits up in here. They sell into the lows. 6 to 12 months can be included in the retail pleb-like category. Not too bad here. They sold over there, but they sold. They're not in, they sold. If we look at the 1 to 2 year aged coins, are there big sell spikes? You've got big sell spikes at the high. You've got big sell spikes at the 51. So it's come down, it's broken the level. They've waited for a brief relief rally, and they've sold into it. So this is quite alarming here. Let's look at the 2 to 3 year. Okay, this is really alarming. You had some sells in there. You had some sells here, here, and here. But the fact the spike there is huge, and they usually sell into highs. So if you look at all the spikes, that was sold into what people thought would have been a high. Here was a high on the big relief rally from the breakdown. You had the same here, all-time high, pretty much, and here on a relief rally. So they're selling at key points. So that's really concerning. If we look at the 3 to 5 years, this is showing you that the big boys that had the big positions that have been holding for a number of years have been selling out. So these guys sold out here, which it's not too bad, but it's not great either. And you probably have the last ones that are remaining selling in here at the 50. But yeah, overall, that's concerning. If we then look at addresses, we want to see that the number of addresses that hold more than 100 Bitcoin or 1,000 Bitcoin, so not $1,000 worth of Bitcoin, 1,000 Bitcoin. So we want to see that they're increasing. So the people that have 800, 900 Bitcoin, or investors that have 800, 900 Bitcoin, are adding to their wallets. That we want to see that they're accumulating even more. Here we can see that the wallets that have more than 100 Bitcoin have been decreasing. So they're actually offloading some of their size. Let's look at the 1K Bitcoin wallets. This has been pretty flat for a long time. They would have been selling out, and they did sell out into these price highs, which is why it was decreasing, and now it's flat. But they've done all their selling in here at the highs. So this is probably the best cohort we're looking at. And when we see this start spiking up, so here we saw it spike up, and we got this brief rally just after. So this is a really big indicator, this one, and people don't give it the credit it actually deserves. But when this starts spiking up, like this is sort of one that goes under the radar. No one really takes much interest in it, and it's stupid really, because this is one of the best ones out there. But the 1K balances we see, they've been flat the whole way, pretty much. They've been flat, and any significant spike up has usually led to a bottoming and then a brief rally up, whether it be actually brief or more considerable. This is the cohort to watch for. If we look at the 10Ks, we can look at the 10Ks, but we don't really. These are more like your diamond hand type people. We can see they were offloading into the price highs. They jumped up slightly here, but at the same time, if you look at the number, it's only 91 wallets. How big of a spread of data is that, or is that enough data for you guys to make your mind make your mind up off? I would say this one is sort of redundant slightly, and a lot of this, people can't afford 10,000 Bitcoin. It's just too much money. So a lot of this has been left over from the 2012, 2013, 2014. But yes, so on chain wise, we don't look that great. We look like we're trying to sell into it. I've seen there's been some questions, so I'm going to read through them. In 6 to 12 months, yes, so the 6 to 12 months cohort is not really the best cohort. Like, there's not clear signals on, where am I going? Sorry. It's not the best for signals. If we look at the 6 to 12 month and we pull right out, I'm answering Shakir Raj's question. So look, they were, you know, there's no real pattern from this. So they were selling at the crash just before the crash of the lows, and then after here they were selling. This is all selling, by the way. This is spent outputs, so it's all selling. It's not anything to do with accumulation. But there's no clear indicator here. It's just they did well to be selling up here, to be fair, but they sold in a crash. So, you know, either way, here they sold just before the crash. Here they sold at the bottom before they got this. You know, this is not a reliable cohort to be looking at. Just to answer the guy's question. But let's now move on to the charts. So we know from the macro is not great setting us up. I do this analysis and this assessment on a sort of week by week basis, and I don't try and plan 6 months in front. I will try, you know, if I could tell you something 6 months in front, and the Fed might change things in that 6 month run ups, then what I said for the 6 month prediction might end up just being so wrong because there's been changes. But what I'll do is I'll weigh things up here and now, and I'll weigh up what the next few months look like, and I'll adjust my portfolio to suit how I think those next few months will look like. I think it's quite you can see when things look bottomy, you get these big capitulation candles, and I don't think the 4 year cycle is not really a thing now. I don't think we're going to go into like a 1 year, 2 year bear market. I think we could have a 6 month bear market where prices go sideways, step down, sideways, step down, where we see maybe a bottoming at 24k to 30k. But I think the institutions are here now. They want to be playing. They did play. They've now sold themselves out. Because they're in the system now, this isn't something that just goes through that boom and bust cycle anymore. This will now be traded like normal assets. So I don't think you're going to see these 2 year bull runs and these 2 year bear runs. I think we'll probably see 6 to 9 months of a bear movement now, and then I think going into the midterm elections in the US in November, it'll either start a few months before that or it will start a few months after that. Because the miners at the moment are holding their coins, because you have to remember the rewards are half next time, and we're already at 19 million. So there's only 2 million of these things left. So they're trying to use that Bitcoin they currently have as collateral to raise money to pay off their costs, but they'd rather be holding the Bitcoin. So that's almost a bullish signal, but it has always been a bullish signal. But this time it's not really that bullish because all of them are taking the same stance where they'd rather be holding these Bitcoins than selling them into the market. But you are starting to see the sales from the miners go up slightly. So they might be thinking we'll sell here at 41, maybe rebuy at 30, something like that. But let's go into the charts. So we know from the macro, we know from the on-chain, we're not set up that well. Let me put the drawings back on. Okay, so it does look a little bit complicated. We're on the daily, so let's stick with the daily. So the white horizontal lines are supports and resistances. At this moment in time, we're using one as support, but we hit one as resistance. If we break this one, I would say there might be a slight one in here at 37, but I think if we do break, we hit 37. As I've said already, the liquidity isn't really there, and you can sense this more in the altcoins than you can in Bitcoin. So we're starting to see that with Bitcoin is having some rallies, and I mean, look here, Bitcoin is down 1%. Everything else is down much more, other than your oddballs like Luna, Aave, and Tezos, the ones that are just having a brief movement on that day. But the general market is down against Bitcoin, and you'll start seeing that the dominance will begin to increase, even though dominance is actually a bit of a crap metric because there's so many new coins coming to the market on a week-to-week basis that by taking dominance, you're making Bitcoin perform against new coins every single day, which are going to get some liquidity. So it's sort of a hard metric. Like, it's a bit unfair on Bitcoin to use that metric against it, but I still think we'll see dominance increase for Bitcoin because the liquidity just overall isn't there. Every time we're trying to get some form of pump up, we just can't. It's just not hitting there. We haven't even hit the orange boxes. So now we're in a bit of a, it's not a great bear flag, but a bit of a bear flag towards the end of a downtrend channel. You can see as we broke the 50% line, this white dotted line, I don't know if you guys can see it on the stream if the quality is good enough, but yeah, there's this white dotted line here. As we broke above it, we burst above it. We then retested down and hit the line exactly, and then we flirted up and down with the line couldn't get above it convincingly, especially with this candle here. We went up and then closed towards the low, so that's a rejection candle. That's saying that it's just a rejection. It's just a rejection candle. There wasn't liquidity there to push it higher to claim new levels. So then you saw this big dirty candle here come down, and it's then tested the support. We're now in a flag-like situation where we touch the top of the flag. We're now coming down. We might touch the bottom, the mid-range of the flag, and then break. But we could still break to the upside because we are due a bit of a relief rally. But at the same time, the liquidity is not there. The charts look okay for me to go higher. I mean, we've not created any bull divs or anything like that, but the charts do look okay for us to go higher. But the issue is the macro. That is the real issue, which is why at this moment in time in the paid part of the group, the pro guys, we're looking for shorts. And some have come up, and I'll go through them now. So Ethereum, we've had not much luck here. We just missed the orange box, did we? No, we were a little way away from it. So yellow box is buys, so longing, and orange boxes is shorting, just for all the free members that don't know. So I would fill short orders in the orange box, and I would long in the yellow box. But I only play the boxes once. So as soon as I get a fill, I play the box. So here, I would not be replaying the box. So technically, I have to move this over and close it there. So we got the fill once. It bounced perfectly off the bottom of the box. Now with these charts, because I always get a few people to say, "Oh, you've just drawn these, just before the stream, just to suit you." But if I did that, I would have the orange box lower, just touching the wicks. But you can, if you're on the paid side of the group, you know that I post these charts. We get the fills and then they go. So I would have been posting this yellow box when we were up here, and then we got the fill. We bounced perfectly off the bottom. I mean, this is a perfect bounce from the bottom of the box. So you would have filled all your orders. So you would have been doing buy orders and getting heavier the further you go down to lower your average entry. So this is a bit of a perfect example. So don't take this one as the norm because it doesn't go as perfectly as this. But you would have had a move up and you would look to have taken profits in the orange box. But because we're bearish, we don't play the yellow. We only play the shorts. So we only play the orange. So for now, we're not interested in Ethereum. I'll be interested in this yellow area here if we get there, but more than likely for a bounce play. So we can see that we got a move here. It actually held the whole way. But yeah, the yellow box played quite well there. But let's look at Litecoin. I'm not interested in. Litecoin just can't get liquidity, guys. See, look, you play it once, you fill your orders, and up you go. You can retest a new downtrend line. As soon as you play it a few times, the bids are not there, the liquidity is not there. They're there for... These are the traders that are waiting for a breakdown. They want to fill their orders, and they want to take some quick profits on the way up. It's usually high leverage guys that are trading it. So when you come back down again, they're not interested in this. They're looking at a new level somewhere down here. So that's more than likely. I will actually rechart. This is Solana, so I will actually rechart this, and there will be a yellow box somewhere around the 70 to 80, maybe even $90 mark, and that's where I'll be looking to bounce. But Solana filled one of our shorts perfectly, so I'm still in this short now. My average entry is 157. I have, I shouldn't be telling you guys this, but I have actually added to it at 145, just because it was flirting with the trend line, and when it flirts with the trend line, you usually get a break below. So I did add in at 145, but don't do that. Don't chase the trades. Just play with the yellow boxes and the orange boxes, and as long as you don't oversize yourself, you'll do okay. Let's look at BNB. It played the orange box, and look, let me just declare something as well, because I would have posted this orange box when we were priced in. So when we would have bottomed. Once we'd have bottomed, if we'd got this blue candle, I would have then posted the orange box for the short. So we go up, we touch it, and the green is a buy box as well. So it's usually an overlapping convergence box. So this is the sort of strategy that I play. So we did actually close underneath, which is usually not a good sign. So on my odds, it's usually, so I track it on the spreadsheet. So on the spreadsheet, a close below the boxes is not good really. But anyway, we got the bounce up. So if you were still holding it, we had the trend line, luckily, that was sort of the last support. But we filled in the orange box. I don't know if you guys can see, but there was a fill of the orange box. This was a good one to play, and AVAX was the one I was looking for, but we didn't actually fill AVAX. But let's go to Matic. Matic is a monster. We just missed the box, so fine, we don't play it. You're better off not playing than chasing a loser. So just don't play it. But Matic, I personally wouldn't have played even if it filled the box, just because I'm petrified of it. Because it can just do these like monster candles in one. Like from here, it opened at 205, went down to 170, and then closed at 230. So you got sort of like a 30% swing in a single day. Like that's just frightening. I don't want to get involved in that, especially not for a short. If we look at Polkadot, I'm only doing another 3 or 4 more charts, guys. So, okay, this is it's holding the support reasonably well. But if you was to break the support, you know, it'd be sayonara. Really, you're going down to 19. But look, touch the orange box. I wouldn't have played this because it's too local. You want a master orange box, not a local box. So a local box would be something that's for these movements here. But I want the whole movement. So this is the main orange box here. But let's be fair, with the liquidity that we're getting right now, we're not going to fill this box, you know, anytime soon, unless the Fed changes its stance, unless something ridiculous comes out where, I don't know, I'm making something up on the spot. Like, say Apple was to announce they were getting into crypto in a heavy way. Something like this would change the sentiment. But for now, we just, yeah, I didn't even play this because it was too local. Chainlink was a really good one that a lot of us did play because it was a main box. You got some really nice fills. It's now broken down to 22s. You'll likely get a test. You're probably about there. You can go. So if you're still in your link short, I would say maybe take some profits here because you can get bounce off the oh bloody hell, off the uptrend line. So I would say take something off the table, like pay yourself. Yeah, take something off the table. But perfect orange box. And guys, this was all posted way before when we were sort of in here. So, and I mean, you can go back through, if you sign up and become a paid member, you can go back through the watch list, see these charts posted without the price action. You know, this is over the last like eight days maybe. I probably posted this box 2-3 weeks ago. So, you know, you see the boxes, you place the orders, you go and get on with your days, your weeks, you forget about it, place your stop loss slightly above, and then just let them play. But the boxes are what work. AVAX is one I was really looking forward to, but we're just not getting there. We keep breaking below the trend line. I can see this filling in this main yellow box at some point soon, to be honest. I don't think we'll be able to reclaim unless something mental happens. Like technically, you've got a bear flag here. It probably look better from the 12-hour actually. It doesn't look much better to be honest, but yeah. So you got a high move originally, a lower bounce after, a test of this. I can see this breaking down to be honest. Yeah, I think it's at a horizontal support. No, it's not. So yeah, I could see this breaking down. Let's go to the daily. Let's look at Luna. Okay. So Luna will fill the boxes perfect. Like look here, Luna does actually play the boxes unbelievably well. It's probably one of the ones that respect it the most. This was a local one here that I posted. We actually filled on the 2K challenge. We actually filled our orders for Luna here. So you got to move down. It opened the candle at 63. We got to move down in the same day to 50. We filled at 50 and it closed up at 78. So an absolutely mental day price wise. You're talking about filling in here in the same day, having crashed about 22%, 23%, and then climbing another 60%. Like it was a ridiculous day. But you saw the same here, fill with the yellow box. And guys, if you do sign up and become a paid member, you can go back through and see all, see me post these things before they happen. I said I wasn't going to play this yellow box because I was just a bit scared. So, you know, ideally I need a computer to trade this for me and go through the odds for me because I'm just not headspace good enough to do it. The computer would be better at doing it. But you saw here, this was a local box and the channel. So you don't really want to play this one. And I did say this to a lot of the pro members. Pro members in the group, you have to back me up on this. But I said this top one is a good idea to play, and we got a really ugly rejection straight away. So, and I said 73 was the target. We went to 74.16, so fine. just missed out. But you're still in profits even if you played it now. But let me do the last coin as Phantom. I'll let you all go. It's probably possible. We've got a big bear div here. If I get a test up here, maybe to the 3,310, I'll consider shorting just because of the bear div. And it's broken this main trend line. Tried to retest it, came below. Tried to retest it, got up, rejected. So I'd like to think now if we can go here, get nowhere near retesting this big trend line up here, end up coming down and breaking down to 270 level. I'll try and short a 3,310 if Phantom can actually get there. If it can't get there, then forget about it. There's better opportunities elsewhere. But that's it for now. Yeah, that's it. I think it's possible we do get some form of relief rally. I'm not ruling it out. But either way, over the next few months, I don't want to be heavily exposed to crypto. I want to be slightly out of crypto. I want to take the short opportunities where I can, which is why I say, come over to the other side of the group, find these orange boxes, play them, because the shorts can, like, look at Luna. It was such a good short. Filled the orange boxes brilliantly. You've got a 87 down to say where we are now, 78. You've got a 12-15% move. We play on a 10x leverage, so you've got 120% move there. Chainlink was really good as well. Solana was really good. BNB was, all the main coins were covering, all filled, other than Bitcoin and Ethereum. So everything else filled. But yeah, I think it's possible we can get a relief rally just because, price has been battered recently. But, we're testing the lows all the time and we can't seem to get the liquidity. So I think there's a strong chance we're going to have a further, even if we do get a move up to 46, 47, I still don't think we'll break out. I really don't. I think when I'll fill shorts, like my life depends on it. And then I'll look for a move down to maybe 34k, something like that. But yeah, that's it. In the next few months, I don't want to be heavily exposed to crypto. I want to look for opportunities to short. And I want to wait till I see one of those big capitulation candles where we start getting a slight recovery, and yeah, then I'll start buying up with the USDT I have on the side. So I've just seen the question, when will we get the shared chart setups? So the likelihood is I will do this either tonight or tomorrow. I will do a post explaining it all. I'll probably actually do it tomorrow because it's getting a little bit late now and I have to eat and other things like that. But yeah, that's it for today. I hope you guys like the stream. That's it. I'm done. Any questions, message me in the group as usual and I'll get straight back to you. Thanks everyone.